Hello traders, good morning, how are you doing? This is Alberto Alvarado broadcasting from Mexico City. Here is 4 a.m. and 30 minutes past the hour GMT time. It's 9 a.m. 30 minutes past the hour GMT time, 4 a.m. 30 minutes in Mexico City. Just wanted to update, as you've already been aware, I won't be broadcasting Duca's copy yesterday. I didn't broadcast yesterday, today, and tomorrow. So this is the way I'm going to update because I consider it's really important that we keep up with the latest price action on the cable. Yesterday I commented that the reason for us to close on Friday the short trade was because I was seeing a very strange price action at those levels that correspond to a very long-term support. We decided to close that with approximately 400 pips of profit. Then yesterday the market opened to the downside and retested, I believe it was the 129.50. No, 128.50, I guess it was 128.50. But in the webinar yesterday, at least the podcast yesterday, I recommended you not to be pushed by this price action to continue shorting this thing, because again the price action was very confusing, and since all things align to be a long-term support, we could see what we just saw this last hour. So that's why yesterday I recommended you not to touch anything, just to wait to see the price action to confirm us whether to the upside or downside. It was way easier to have a downward confirmation because the trend is down and we still had a room to go to the downside, at least to the 128. But it was necessary to check out the price action afterwards. I commented yesterday that maybe this yesterday's latest downward leg was maybe the last short movement of this sell-off. This is typical in forex. This is called bullish capitulations. Means that the early bulls simply dropped the towel when they saw this kind of things happening. But since we were eyeing this as a long-term support zone that runs from the 130 to the 128, everything here could be a long-term zone for big guys in the forex markets. So this is typical the way it reacts when you have this kind of big guys altering the price action, and you can see it because the price starts doing strange things. And actually that's what happened today. Today we had 1 hour ago a very good battery of data for the United Kingdom. The CPI year over year, it was above than expected. The PPI input month over month was above than expected. It was a very it was expected to have 0.6%. Actually it was 3.3. It is a 500% above expectation, so that's huge. And even though that PPI input month over month is not considered to move a lot the markets, but the thing is that here it was a 500% above expectations. So no matter how not relevant the news usually is, when you have this kind of deviations, you have a very serious reactions. Then we had the RPI year over year above than expected. The core CPI was aligned with expectations. HPI was slightly above expectations. The PPI output month over month was aligned with expectations. But again, it was a 500% deviation favorably for the UK economy of this PPI input month over month data. That is why we had the reaction we had. But apparently that is why we commented that opening short trades was not a good thing. Just the idea was to sit in our hands and see what happens, try to analyze the price action, and then try to decide whether to long it or short it. And this kind of news helps us to amplify and to know what the markets have been doing lately. And in this case, there were, according to the readings after the news, there were a lot of participants more or less anticipating that maybe we could have a very good data in this Tuesday, and they were longing beforehand. And as you can see, those longs paid off. The price is now at 129.72. Got really close to the 1.3. So yes, we could understand this as the market's entering into a neutral thing. But since we are touching on long-term support, I wouldn't be surprised to see this reverting and trying to close the 137. Let's remember that price is really important because it was the weekend gap after Brexit that the pound was not able to close. So there are still interests for a lot of people to make that to close that gap. And if we continue having good data by the UK, maybe this is the scenario. So this is why it pays off not to rush into things. Because yesterday we said, sit on your hands and let's wait. Because I was seeing serious risks to the upside according to the price action. Of course, I didn't have a crystal ball to know that this will happen. But what I do have is a way to read the market and the price action to know that something strange is happening and maybe the markets are expecting something big. And this is what happened. So yeah, shorting at these stages wouldn't be a smart thing because this spike, as you've known, and having a 500% deviation in a data is a huge deal. So yeah, maybe the market won't touch the 128, but still we are in a very interesting long-term support now. So we couldn't rule out that from now on we could have a rally to the 137, but we need to confirm that. It will be hell easier since the volumes that got into the market after this news were really high. So I will let some hours to stabilize here, and then with much more confidence on what the market did, we could find the most certainly long opportunity. But I still don't rule out some kind of short opportunity, but I need to check it out. So yeah. I hope that somebody for the ones that listening and interested in receiving the information that I deliver here, really had the courage not to open a short trade yesterday, because these were the risks that of course, I was not expecting such a spike today, but yes, there were still risks to the upside above what I could have felt comfortable with. So yeah, apparently the market confirmed us that some balls that altered the price action knew some kind of disinformation in advance, and that is why they decided to start longing it. Now it's time to wait again. As I said yesterday, why to risk 400 pip of profit of a trade that we opened before the Bank of England and we closed on Friday? There is no reason to be greedy and start losing that money just trying to chase the market. It has no, it wouldn't be a smart thing. So in any case that we long this, we will of course wait for a pullback. It could take more time because yes, we're still having strange price action. This is a volatility spike, so we need to see how this settles down. In any case that we decide to short it, the market really needs to convince me to do so because, well, all the reasons were previously explained. So yeah, in any case that maybe you decided to take a shot and longing this thing, well, just grab your profits. We still have, we could have range bound conduct by cable during the next days. It depends on the next body of data. In the UK and the United States one, this kind of data of course creates a lot of expectations and on the UK economy. Overall, after having Brexit, everybody was supposed to think that the pound and the UK economy could simply be destroyed, but surprisingly for some, not for me, this kind of data is saying that Brexit was not the worst thing to happen to the UK, and this kind of data creates a lot of hype. So if we receive a slightly bad data maybe tomorrow, we could have the reverse effect. So just sit on your hands. Let's wait for a good entry point, either to the upside or downside. But well, just wanted to keep you updated. And this is, in conclusion, is when you start seeing something that you don't like, in this case me, that after that news release on Friday, I was not really liking what the price action was doing at the ending of the day. I decided to close the trade because it was weekend. We had weekend ahead, so yes, it pays off. It pays off just to know when stop being greedy. I didn't want to have my 1.28 target hit no matter what, and just keeping that trade open no matter what, because if we had done that, we could have regretted it heavily at this moment. So yeah, playing conservatively. Overall, when you are retesting multi-decade supports, is a very smart thing, because we must not underestimate the power of a multi-decade support. It's huge, the impact for the long-term bears or bulls. In this case, the bulls, discreetly but constantly, could have been buying and buying and buying every dip, and now we could have these kind of spikes. So yeah, so let's sit in our hands. Hopefully for tomorrow we will find an entry opportunity, depending on how this volatility settles down, either to the upside or downside. I will let you know. The most likely thing is that the real opportunities now is the 137. I will be most certainly watching for a long trade that could target that price, the 137. But let's see. Okay, don't rush into things. Thank you very much for being around, and remember that tomorrow I will be updating this way again, and on Thursday I will be back broadcasting normally through Dukascopy. So thank you very much for showing up, and remember to trade safe, be safe, and bye bye.